Good morning. Welcome to IG's early morning call for the European markets as we wait the start of today's session. Looking for a slightly stronger start, certainly here in the London markets, as it's been a pretty good week to begin with. Let's take a look first of all at what we've got in terms of the headlines this morning. As we boot up the system, we're taking a look at what's happening to record the first week of gains for 2024 for the FTSE 100. And we are seeing holding on to gains across the rest of the European markets as well. So things not looking so bad at the start of today's trade across Europe. This all comes as we've seen UK consumers overnight see the GfK consumer confidence number rising to a 2-year high. Can you believe it? Helped by lower inflation. You've got the Bank of England interest rate meeting next week. Will they, won't they? Almost certainly not. They won't move at all. That's the plan, I think, for next week, so far as the markets are concerned. But many are now pricing in losses, or rather a drop in interest rates later on, sometime later this spring. And late last night, we saw several companies producing numbers, but I wanted to pick out Intel in particular. Stock down around 10% in the late trading session last night on the IG platform. The numbers themselves were pretty good, but the concerns come around AI and the fact that many now believing that Intel is not doing enough, and there's concerns about the outlook for earnings. Take a look at volatility. We are up today only by a small margin, but it continues to bump along the bottom. We're currently trading at 1476, but money going into risk assets, and it's, as I said, a pretty good start to the trading day. 24-hour markets indicating a stronger start across pretty much all sectors here in the UK. I'll take a look in some more detail at that consumer confidence number in just a couple of moments' time. But at 75.69, long on this with a stop below recent price action, looking for a stronger start in the London markets. We're holding on to the recent gains on the German DAX. We are slightly higher than we were at the close last night on the DAX, and we're above the point we were at, comfortably above the point we were at the close of 2023. So we're looking at a plus column for the German markets. French markets just trading slightly below where we closed out the 2023 trading year, but we are looking for gains on the French markets as well at the start of today's session. Overnight in Asia, there's no Australian trade today because of Australia Day, so many out there for that, enjoying a long weekend. In amongst some of the other news stories out overnight, real concerns about what happened yesterday with Tesla. That stock was down 13.5%. That's hit a number of these companies that are in the EV space, South Korean battery maker LG Energy Solutions, a supplier of Tesla, GM, Volkswagen, and others, predicting a slowing growth in the global electric vehicle market this year. And that's hit some of the automakers in the Japanese markets. Nikkei 225 down 1.4%. Hang Seng Stock Index, where BYD, which is the Chinese EV automaker, is on the markets. They're down 1.5% when last looked. LGES, the LG Energy Solutions, sees a market growth in the mid 20% range this year. Group also signals intensifying competition from Chinese rivals. And I think this is the message that the competition is going to bring about lower prices, lower margins, lower profits for companies. So that's the real message, as I was saying. Singapore Straits Times are managing to eke out gains as at the close of the session there today. Wall Street closed late last night. Saw gains across the board. They weren't massive, and you can see the fact the Nasdaq really quite a poor move there. I want to show you what's happening on the 24-hour markets, the Nasdaq 24-hour markets closing pretty much the low point yesterday, which is where we're trading at the moment, 17,371. I mentioned Tesla. I think it's worth looking at what happened there. The big declines that we saw at the back end of Wednesday's session on the earnings. Do I mean Wednesday? I do mean Wednesday, I beg your pardon. And then it came Thursday's close, lower down at $181.99. And that was the lowest close we've seen in the Tesla stock since May last year. And real concerns about margins, profits, because of the stiff competition coming through from many markets. And Tesla's saying it's in the middle, or the trough, if you like, between two growth spurts. The initial growth spurt coming towards 2020, which has now dissipated, and before the new run of vehicles that are due to come out. So Tesla under a lot of pressure, seeing a lot of these automakers and EV makers especially on the way down. Let's stay with the US markets because I want to show you what else is happening. Yesterday we were very, very close to breaking to a new intraday record high on the S&P. Then came the pullback. And today we're pretty much trading where we closed out yesterday's session. As I've just explained as well, the Dow, similar sort of situation actually, not too far away from the red line here, which is a record high at 38,110. So it is just a market which is trying, I think, to achieve new record highs, as indeed we saw at the beginning of this week, where we saw that new intraday record high on the Dow, the S&P, and the Nasdaq. So despite the fact we have seen a little bit of poor performance over the last 18 hours or so, especially for some of the companies at the front end of some of the technological moves, such as EV makers, it is, broadly speaking, a market which is holding on to recent gains. But I think I want to focus on this good news here in the UK with consumer confidence, certainly ahead of the Bank of England interest rate meeting next week. It's certainly interesting. Consumers are the most confident in 2 years, according to the latest GfK survey. Index rising to a negative 19. It is still negative in January from a negative 22 in December, but economists had forecast a smaller improvement to a negative 21. But it is nonetheless a 2-year high. Lower inflation helping consumers to feel better about their finances. GfK said all 5 of its confidence gauges rose. The outlook for personal finances in the next 12 months rising out of negative territory for the first time in 2 years with a 0 reading. Despite this, the US dollar is getting the better of sterling. Look at this chart here. Sterling down for a second day in a row against the US dollar, currently trading at 126.86. I don't have a position open on this, so I don't have a particular idea of the direction of travel. But you can see it has really sort of flatlined since the highs we saw back on the 28th of November, not really going anywhere. Waiting, I think, really for next week. We got the Fed next week on interest rates. We got the Bank of England next week on interest rates. But if they say the same that we had from the European Central Bank, there's not really much guidance in any firm direction or another. Talking about confidence, very different picture emerging in Germany, where we've seen the GfK consumer confidence number there. That fell to a negative 29.7, below market forecast for negative 24.5, and pointing to the lowest figure since March 2023. Before I take a look at euro dollar, let's take a look at what we got in terms of US economic data out later on today. The few macroeconomic indicators due at 1:30, among them core PCE price index. Now, economists forecasting a 0.2% rise month on month for the month of December. Also, personal income and spending and pending home sales as well. As promised, a quick snapshot of where we are. For the dollar, first of all, to show you what's happening. This recovery here that we've got, the Elliott wave, 5-wave down, taking us down to the lows that we had down just over the 100 level back in December. Since then, we've seen the corrective move. I've drawn a question mark here because it's very difficult to know exactly where this is going. Some would say, in fact, we've already completed this, but the move is interesting. We're holding on to recent gains at 103.34. How do you trade this in euro dollar terms? Well, it's interesting actually because the euro dollar is forms around about 60 or 70% of the dollar basket, but we've got a breakout here. Euro is down relatively heavily against the US dollar. And in fact, in today's session, we have now dipped below this box I've been looking at, this box which gives us this area of support that we had, and that's now become resistance. We've dipped below the 76.4% retracement. And in today's session, we're at the lowest level we've seen since the 13th of December 2023. So the lowest point we got for the year so far for the euro against that stronger dollar. Where do we go next? Well, if we get a candle close below the 108.22, which is this line of support we have on this fib here, my next price target is the 107.24, which is the total retracement of this move. But before we get there, we do have a little bit of support potentially for the 100-period moving average at 107.77, which I think if you are a tentative trader, possibly that might be the point at which you might exit the trade. That being said, it depends on how quickly we get down there. And if we see a fairly strong move, and that could happen over the next few days because we've got some interesting trades possibly around the dollar. Today's PCE, next week's Fed meeting, and some other economic data to watch out for as well. And if we do get a stronger indication of what's happening in the US economy, and there's a potential there for the Fed to keep interest rates on hold in March, not cut, we currently got a 50% chance, according to the Fed funds market tool, suggesting that the Fed will cut in March. But I'm not so sure that's going to happen. And if we don't get that cut come through, then I think the euro is on its way down against that stronger dollar, down to this price target at 107.24. If you're short on this, stop goes above the 200-day moving average with a view to hitting that sometime in the next week or so, potentially, if we get strong US data. Now, let's take a look at what's happening in terms of some of the corporate news headlines. We've got a couple of companies I think it's worth mentioning here in the UK. WH Smiths, I should say, the stationers, had a trading update this morning, and things looking pretty good. Total group revenue up 8% in the 20-week period. The largest division, Travel UK, revenue up 20%. Now, we know and have been reporting for some time that Smiths is improving its footfall, or seeing an improvement in footfall in travel areas. We're talking here airports, we're talking here railway stations, but also on the high street as well. Despite that, we've got a drop because of the concerns about the consumer. Now, we've seen that number out overnight, excuse me, coming through from the GfK consumer confidence. And I think this, coupled with what we've just seen here from Smiths this morning, there is the potential for upside for a trade here. Let me just quickly set something up for you. 120, I'll start that again, £12.28 is where we're opening the trade. Stop goes below this line of support. Let me just put that down there for you. Stop goes below this line of support. So you're stopped just under the 200 level. Let's call it 190 would be a good place for your stop loss if you're long on Smiths going into the start, pardon me, of today's session. Where's it go? Well, I want to show you here. Let me draw a fib on here just to give you an idea of the sort of area of resistance we could end up getting to. This would be your price target, the 61.8% retracement of this move here. That would be your price target at 13.11 if you're long on Smiths at the start today. May not get there today, but I do think this number out this morning looks pretty good. So I want to flip onto the other side, very much the dark side. This is Superdry, another release and another warning. First half results, group revenue down a whopping 23.5% on prior year and impacted by the challenging consumer retail market and seasonal weather, as well as the underperformance of the wholesale segment as well. The company's doing a bit of a problem in terms of how it deals with its in trading environment. The adjusted loss before tax, 25.3 million. Last time in the first half, the previous year, that had been a loss of 13.6 million. So that's pretty much almost, well, it's not double, but it's certainly an awful lot worse off. The company says further action is needed to support the balance sheet with funds received post half-year end from a joint venture and disposal of assets in the South Asian region has given them a net £28.3 million of net fees and taxes. But I think an indicator here as to how bad things are for Superdry. We're opening at 16.9 pence. The Chief Financial Officer, Sean Wills, will be going in March. The new Chief Financial Officer starts on Monday. So it's pretty much an immediate turnover. And that indicates how things are, I think, there at the moment for what's happening for Superdry. Not a particularly impressive picture. Let's move on and take a look in some more detail about what's been happening abroad. In France, late last night, we saw the release of numbers out from LVMH, Moët Hennessy Louis Vuitton, which is the world's largest luxury goods business, reporting that 2023 was a record year for revenues. It confirmed that its key fashion and leather goods division saw sales up 9% in the fourth quarter, and while this was just below the Bloomberg consensus of a 19.14 increase, it was nonetheless the best performing division, as overall group sales rose 5.5%. Net profit, however, up 8% to 15.17 billion euros, just missing a consensus forecast as something just slightly stronger. Negative currency effects, the company says, impacting group margins in the second half of the year. Now, we know that this is one of the companies which has been doing well, but nonetheless, look at the share price chart. You can see here that the company has fallen by more than 23% over the last 6 months amid the global slowdown in luxury demand. In late August, LVMH was overtaken as Europe's most valuable listed company by the Danish pharmaceutical giant Novo Nordisk. Why? Because it makes diabetes and weight loss drugs, Ozempic and Wegovy. And that company is benefiting from that, which is where the brisk business is. But nonetheless, we've seen an impressive week or so far for LVMH, climbing off recent lows. Those lows were the lowest trade we had since the 4th of November 2022, that low we saw back on the 17th of January this year. But there's been a little bit of recovery. I think, broadly speaking, these are pretty good numbers in what is a difficult market for luxury. Now, let's take a look at a couple of stocks that moved in the late session on the IG platform late last night. If you were watching what happened late yesterday, you'll have seen a drop of almost 10%, or around about 10% for Intel, after the chip maker's guidance for the current quarter came in well below expectations. These were the results. Earnings per share, 54 cents. We've been looking for 45 cents. But hang on a minute, that looks good. Revenue, also better than expected. But the revenue forecast for the first quarter on earnings per share below expectations, and the company no longer gives fully a financial forecast, which is another thing that may be worrying. For analysts, 2024 will be a make or break period for Intel. The group has to start delivering solid profits, according to analysts, from data centers and AI. And it's far behind a couple of rivals in the AI space. We're talking here about NVIDIA particularly, and also Advanced Micro Devices, which has stolen a march on Intel when it comes to what's happening on AI. For now, Intel's central processing units are often used in conjunction with NVIDIA's AI chips, but Intel is not yet competitive in the market for AI-specific chips. And look what happened late yesterday. I want to show you the breakdown because that was the entire day yesterday. This is the 1 hour chart, and you can see absolutely the point at which it released those numbers. It was startling, the big drop that we saw. Going back to the daily chart, gives you an indication as to where we're going to open. We're going to open on Wall Street at the lowest point we've seen since the 13th of December, and clearly not a particularly good night last night. Wasn't good either for Visa, the credit card company. It released numbers as well for earnings and revenue. Again, marginally better than forecast. Revenue coming in at 8.6 billion. We've been looking for 8.5. And on forecasts of $2.34, we've got $2.41 again. Pretty good on the whole, but it was once again the outlook, which continues to concern investors. And you can see from here the stock losing ground and extended trade. Investors not impressed by Visa's forecast for the current quarter. The company says it sees an increase of upper, mid to high single digits in terms of performance in the second quarter net revenues, compared to 11% growth in the same period last year. And this is the problem for these companies. They are so tightly wound into this idea that they've got to keep performing on the upside. Any hint that things are on the downside, and you get a drop. And that's exactly what we saw yesterday. The stock ending extended trade down 2.59%. Now, after Visa last night, we've got American Express reporting earnings before the bell today. The Street expecting earnings of $2.64 per share on revenues of $16 billion. And it'll be interesting to see exactly what they are doing in terms of the expected move. American Express, like a lot of these companies, is all sessions on the IG platform. This will start trading at 9 o'clock this morning, UK time, at $186.75. If you get good numbers, that's the area to break. 189.50, which are the highest we saw intraday back on the 5th of Jan this year. And that was the highest print we'd seen in shares for American Express since the 21st of April. Very different sort of picture, very different sort of feel to this chart than we got from the moves that we've seen in the other chart that we saw from Visa. Now, one other company worth watching, I think, at the open this afternoon, we saw numbers out from Levi Strauss. Levi Strauss is an interesting trade. It's not all sessions, but I'd say it's interesting because we've got a really interesting build-up here where we've seen this impulse Elliott wave rise from the lows that we had back on the 6th of October. Alongside with earnings and revenue broadly in line with forecasts, the daily maker warned of annual sales and profit below Wall Street expectations. Now, this gives me hope because I'm a trader. I trade on the upside and also on the downside. This gives me hope that we could well end up going for this question mark down here. So this would be then the corrective wave. I'm looking at these numbers today. The company announcing a 10 to 15% cut of global corporate jobs, which is a potential upside benefit. But the fact that they got warning of annual sales and profit below Wall Street forecasts. This is a stock which is going to drop at the start today. I haven't seen any pre-market forecasts, but let's assume that we've got this corrective phase in place. I'd put my stop just around about where this B is up here. Let's say $16.50. We're opening at $15.74 at the start of the day's trade, and I'm expecting it to drop. Where it drops down to remains to be seen, but then you'll see that we've got a completion then of this corrective wave. C, in theory, should end below 4, which would take us below the 200-day moving average. There's a lot of negatives here building up for Levi Strauss, and I think this is underpinned by some of the fundamentals. And that would then complete this Elliott wave correction phase that we've got here. Really interesting to see what's going on. Talking about some of the correction phases, I want to show you another chart here where we've got another Elliott wave here beginning to build. Let me take that away because we can delete the rectangles there on this just to clear the air a little bit. This is another one of these Elliott wave formations where we've got a correction. And in fact, this is US crude. Now, yesterday, let me get rid of that. Yesterday, we saw a completion of this symmetrical triangle. I drew the height of the triangle, gave us a projection. The projection coincided with the 200-day moving average. We got up to 77.45. That trade is now over, and I think we can say that that Elliott wave is now over as well. But I want to show you what's happening with Brent because there's a little bit of room still here to go. We're above the 200-day moving average. The move yesterday, technically speaking, takes us up above A. So we've got the corrective phase underway. But for me, my price target still remains at 85.50. I was talking to some interesting clients yesterday coming through the London offices, and we were talking about this trade. And I was talking here about this symmetrical triangle, height of the symmetrical triangle, got the breakout, you've got your price target 85.58, and that would be a healthy move up here for this corrective line here, again taking us through the Elliott impulse wave on the way down, the recovery underway, and that's my price target here at 85.58, which is that move up that we've got for Brent. So we've still got some upside to go potentially. Last Friday, just to remind ourselves of what happened with Baker Hughes rig count, increasing to 620 rigs last week from 619 the previous week. Number of active oil rigs falling by 2 to 497. Now, the more rigs you get on the market, the more downside potentially there is to the price of crude. We'll have to see how things develop later on today, but that's the setup there that I wanted to talk about. Talking about Elliott wave, I want to talk about another pattern that's developing here for copper. This is a copper chart. Now, I love patterns. Patterns are great to trade, and we're now looking as though potentially we've got a right shoulder developing here for copper. The lows that we had gave us the left shoulder down from the lows of 9th of November, and we've got a neckline here which will break us. Let me see what the price target is here that you should be moving towards. So we're currently trading up here. Get rid of that. We're currently trading up here at 85.15. That's the price target, 84.24, and that would give us that move down. And as soon as it breaks the neckline, that then completes the head and shoulders pattern. So that's your price target, 82.42. If you are short on this, your stop would go above the right shoulder at around about the $86 level or $8,600 level. 85.15 is where we're trading there at the moment with copper on the way down. Quick update on what's happening with gold. Not much move in terms of where we are. In fact, absolutely flatlining on from the close yesterday. Broadly speaking, holding on to this line of support at 2004. That's it from me. me. We're back at 10:30 this morning with Charting the Markets. Hope you can join us there for that. Angeline will be with you at 1:30 today with Beat the Street, as we look then to the early morning call for the US markets a little bit later on. Ton of stocks to watch out for today. And I do urge you to watch out for what happens with Levi Strauss on from what was a warning out late last night, which could see a development of that downside trade for the stock. American Express reporting as well before the bell. Something else to watch out for. All sessions on the IG platform.